Welcome back. A leading fund manager says that US equities are the most overvalued in over 40 years, other than in the dot-com era where stocks had gone to extreme valuations. Now, the some same fund managers just some time back said that US stocks still have a great scope of rallying further. This was maybe just a month back. Now, the valuations in US stocks have not gone up so dramatically. In fact, if you look at this year 2015 thus far, you will realize that stock valuations are about where they were in the beginning. I mean, the rise has been very marginal to justify such a dramatic change in opinion in such a short span of time. So, why do fund managers change their opinions so quickly? Are they not able to see the trends in advance? Or is this a reaction to trends which they are beginning to see as time passes by? Let us take crude. Some time back it was falling quite dramatically, then rising, then it had fallen, and once again it is on an upward trail. Fund managers are unable to decipher whether the trend is upwards or downwards in crude prices. They point out many factors in both the directions. For example, they say that the Libya factor has been exerting a positive upward momentum, but the other factor is that the fall in demand in the world has been exerting downward pressure. At the same time, the possibility of an Iran US nuclear deal could bring down the prices, because a lot of Irani's oil will start flooding the market. Here also, if we go deep, you'll find that Iran oil will add only to 0.35 million barrels per day. Long term, it may go up to 1 million barrels per day. That's quite marginal to have such a dramatic impact. Then there is the question of the maintenance. Lot of oil fields are currently into maintenance. At the same time, you figure out that a lot of companies like Shell have been cutting down their capital expenditure on oil. This is in the backdrop of a severe downturn in oil prices. Now, as the maintenance period of US oil fields starts getting over and demand starts coming on stream, this coupled with the fact that capital expenditure in oil has been coming down quite dramatically will go and add to an upward momentum in oil prices. So this is one trend that is very crucial to understand. On the other hand, there is there is the fall in oil rigs. US oil rigs have been falling quite dramatically. At the same time, you will realize that Saudi Arabia has been increasing the utilization of oil rigs quite dramatically, almost 6 to 7% over the last few months. So if you look into this phenomenon, you'll find that oil prices can technically move both ways. So how is a common investor able to understand which way are oil prices headed? How can he make his investment decisions when there is so much vacillation in the minds of fund managers? Which way are interest rates headed? Which way are equity prices headed? And which way is oil headed? All this has a tremendous impact on investment decision making. And unless and until you can figure out, or I would say filter out the noise, as we call in the field of finance, you will not be able to understand a major trend in any of these markets. And the investments that are made thereby will only be a poor substitute for rational decision making. I personally believe that oil prices have now found a bottom, and barring some short-term downtrend due to maybe the announcement of a nuclear deal, Iran, US, or some other factors, the trend looks to be gathering momentum. And you need to understand this, very important, because oil import intensive countries such as India need to be exceptionally cautious on this. Why? Now, if they do not understand it, then they would be buying oil at a perennially higher rate, and this would be adding to their fiscal deficit and exerting great pressure on the currency and on the balance of payments. So the economic situation of a country like India could worsen unless they are able to see these trends in advance. But but here also analysts, fund managers, and even the government says that they cannot predict things in advance. Nobody, they in fact they use this word, nobody can predict things in advance. Sure, nobody can if you don't do your homework. These are very high paying economists, bureaucrats who have access to great amount of research. And I would say, forget about the research. You need to do your own homework to be able to understand where are oil prices headed. Just because of this not being able to understand, you could be making mistakes. If you know that they are headed higher, you should be able to lock in oil at in oil futures at a much lower rate, and the country will benefit dramatically there. So this is not something which is so simple that you just cannot figure out. You don't know what's going to happen next. So just average out, keep buying a little bit of it every month. As a result, you'll find that you'll be buying at much higher prices. You have to see the trends, you have to understand, you have to filter out the noise, you have to understand what will be the net impact of everything, and take a stand and don't vacillate. Stick to your terms, stick to your understanding, and make sound and proper investment decisions accordingly. The more you dither and keep pointing out things on either side, you're going to have tremendous problems in being able to make sound, rational investment decisions. Take care. Happy investing. Bye bye.